Hey everyone, welcome back to Capital Markets Quickie, your go-to source for a quick rundown on what's happening in the markets this week. I'm your host, Endrit Cela, and today we're diving into a holiday-shortened week that's still packed with some pretty significant events. So let's jump right in and talk about what's on the horizon. First up, all eyes are on Friday's August employment report. This is going to be the main event of the week. Why? Well, with the Fed gearing up to cut interest rates for the first time in years, everyone's looking at the jobs numbers for clues on just how aggressive the Fed might get. Jerome Powell has already hinted that it's time to start cutting rates, and many people expect we'll see a 25 basis point cut at the Fed's meeting later this month. But here's the thing. Any sign of a weakening labor market could really spook investors and revive those recession fears that had everyone on edge just a few weeks ago. And it's not just Friday's numbers that matter. We've got a few other pieces of the puzzle coming earlier in the week. On Wednesday, we'll get the JOLTS job openings report, which also gives us a look at layoffs. Then on Thursday, there's ADP data on private sector hiring and the weekly jobless claims report. So there's plenty to chew on before we even get to Friday. Now let's talk about the broader market. Wall Street has been riding high recently, with the Dow even hitting another all-time closing high last Friday. The hope of those imminent Fed rate cuts has definitely been a big driver here. But September and October have a reputation for being a bit bumpy when it comes to stocks. Analysts over at Bank of America are already pointing out that these months can be pretty volatile. So if we get any surprises in the economic data, it could easily cause some fresh market shocks. That said, the good news is that the rally seems to be broadening. Investors are starting to put money into some of those less loved value stocks and small caps, which should benefit from lower interest rates. So, while there's definitely some caution in the air, there are also signs that the market is finding its footing. Shifting gears to our neighbors up north, the Bank of Canada is widely expected to deliver another rate cut when they meet on Wednesday. This would be their third consecutive cut, bringing their benchmark rate down to 4.5%. Despite a slightly better than expected growth number for the second quarter, the Canadian economy showed some signs of slowing down towards the end of June and into July. So, it looks like Bank of Canada Governor Tiff Macklem is shifting his focus from fighting inflation to giving the economy a bit of a boost. Markets are already pricing in another rate cut after September, so it's clear that the Bank of Canada is ready to act if the data continues to show signs of weakness. Next up, let's talk oil. Prices took a hit last week and logged some pretty hefty monthly losses. The market's concerned about an increase in OPEC plus supply starting in October, which is keeping prices under pressure. To give you some numbers, Brent crude for October delivery settled at $78.80 a barrel, down 0.3% for the week, while U.S. West Texas Intermediate crude dropped to $73.55, marking a 1.7% decline for the week. There's also some uncertainty around those expected rate cuts from the Fed. Strong consumer spending data last Friday suggested that the Fed might not cut rates as quickly as some were hoping, which could slow down economic growth and, in turn, demand for oil. Finally, we're keeping an eye on China. They're set to release the August Caixin manufacturing PMI data today, and it's expected to show a slight recovery after July's contraction. But over the weekend, we got some government data showing that Chinese manufacturing activity hit a 6-month low in August. It looks like China's economy is still losing momentum, and policymakers there are starting to shift their strategy. Instead of the usual heavy infrastructure spending, they're now focusing more on boosting household demand. So, it'll be interesting to see how that plays out in the coming months. And that's a wrap for this week's Capital Markets Quickie. Thanks for tuning in. As always, stay sharp, keep an eye on the data, and we'll catch up next week to see how things played out. I'm Endrit Cela, and I'll see you next time.